We're on the man PMI. This is the Purchasing Manufacturers Index, and this is a great indicator for if you're in a recession or not. And let's take a look at the numbers here. So we got a number in for last month's PMI, and this is the ISM Manufacturing Index. So ISM is the Institute of Stuff mostly. It's the Institute of Supply Management, and the PMI is the Purchasing Manufacturers Index. So they go and they poll purchasing managers to get an indicator of. It's supposed to be sort of a leading indicator because it's showing what they're purchasing upcoming, but the data is from last month and it's not really a leading indicator because just if you look at the charts in the recessions, like once you're in a recession, you get the data. It's not a leading indicator. I'll show you what I mean. But the level that you're on here is really important for how the economy is doing. There's a couple articles here on the Man PMI page that are really good. Here is the Markster, and this is a really good chart where he explains the Man PMI and explains that you should smash that like button right now to help me out with the YouTube algorithm. Okay, so he's got 45 here as a baseline for a recession on the Man PMI. And if you go back, this PMI chart goes back to the 40s, and a number below 45 has indicated a recession about 90% of the time. We got a little bit below it here. I think it might be like there probably, which is 44, and that would get rid of this one and keep that one, or here 43. Yeah, at 43, let's see if we can get it tuned in there where it cuts that one off, but it does get this one. And we still get this one time that we went down without a recession. But if you put it at 4250, if you put the PMI at 4250, it's better than a 90% indicator that you are in a recession. And we just saw our PMI number, which was 4160. So we're underneath this line as of last month. And here he's predicting, based on the chart, when we might get down to this level. This was the middle of last year. He posted this and said maybe the end of 19 would be a time when we might hit this. It doesn't really work like that. You can't really predict because it just goes up and down all the time. And occasionally the down goes below and it's a recession. And yeah, I mean, you could try to study this chart and get some patterns, but it's really hard to use this to predict anything. It's really just once it happens. And we can load the current data here. And it doesn't, and when we load the current data, the dates are completely different than what they were from beforehand. All right, so let's zoom in on this. And put it at our preferred number of about 42.5, which is I think is a better number for a real indicator than 45, that you're actually in the recession. So we just got in here, and we'll get another one next month. And this tag of October isn't what October is anymore now that I loaded the chart. It's back here, but we are down here. We're definitely under his line, and we're under my line, saying that we are in a recession, and we just barely went into a recession now, as of last month. So this number will be kind of interesting going into the next month. And there's a couple more articles here that are pretty good. And this is Brian Lewis with MMT Investing, and things just changed. Simple but elegant indicator. Yeah, okay. So what made me think of this? I just wanted to point out that this is an international monetary contraction. It's not just an American thing. And this PMI is just America, but I just saw in the news here that I'm traveling in South Africa. I'm on lockdown in South Africa near the safari park, and I just saw that the manufacturing index for South Africa just hit an all-time low because of the Roni, because of the health situation. And this here's a newer one from May this year, and he's predicting what the thing might be just based on the Roni, and he has this law of large numbers kind of percentage overlay on the PMI, and you can see that somewhere here in the 50s is sort of the baseline, and when you get to this kind of 45-ish range, you're getting into recession territory, but you're not quite in it yet. And once you hit this level, this is really a recession indicator. But if you do the law of large numbers, it's not a flat line at like 45 or something like that. Like this recession indicator line moves around, and then you can see here that this dip that we got, there's ones that went down before and weren't a recession on this law of large numbers. You can get a better indicator based on the peaks, but this green line here is 41.6 is what we just hit, and we just hit this green line here, which is a recession indicator, and then the yellow, which he's predicting, is a major recession indicator. And it's possible that happens in just one more month, because you can see here when it goes down, it just shoots down. And that's what we're on right now, is a kind of a vertical down trajectory on the PMI. And that could go over a couple of months and just drop off a cliff. So he's predicting a major recession, and that's not really crazy based on what's going on right now. But this is a cool look at the wavy version of where recessions are based on the law of large numbers. And by all of these metrics, we are just in a recession now, just barely, and we'll see where it goes. The next couple of months will be interesting to see the PMI. But I mean, that doesn't really help predict like the stock market crash. The crash started in February, and we're just now after the stock market crash, after several months of news about the whole health situation. Now the PMI is like, oh yeah, you're in a recession. So this is not a leading indicator, but it is a good measure of the recession. And then when this thing reverses, you can take a look at, when it comes out, because sometimes you get double, triple bottoms. It stays down for a while. Sometimes it's a really sharp V bottom, and you can expect it to get back up pretty fast. So it might be a better indicator of getting out of a recession than it is getting into one. All right, so that's the man PMI. Here's similar charts. And divergence from the S&P. That's not too interesting. Okay, yeah, just a lot of people comparing it to the S&P, and it doesn't really overlay onto the S&P. Just that crashes kind of line up with recessions kind of off. I mean, yeah. I don't think those are very helpful, but these two charts where it does sort of a baseline, like a flat baseline or a wavy baseline for where the recession numbers are, is pretty helpful. And please hit the like button, and this is not investment advice, and happy trading.